So I want to welcome everybody to today's webinar presentation. My name is Sean Kozak. I'm one of the co-founders with Arc AI, and we have a really exciting presentation today, mainly because it's really geared around volume profile. And before I get into all the details, just a couple groundkeeping rules. We are recording it. We'll send out a recording after the webinar. My team is here to answer questions as I do the presentation. We will provide links for discounted pricing and all that stuff at the end of the event. But yeah, before I get into the presentation, I think it's really important that we kind of touch base on why this webinar is what I'd like to think is something that a lot of people are interested in learning about. How many of you guys are a volume trader, that you incorporate volume into your trading to some extent? Can you guys type a yes in here if you're looking at volume profile to some extent? All of the NeuroStreet trade room attendees in here that are in the NeuroStreet school, you obviously use volume profile, predominantly the CWAP as well, manually. How many of you guys are looking at profiles, volume nodes, all these things? So I come from a volume background. I love volume. I think it's a really good way to understand the market. I think it's one of the most important aspects of trading. And a little bit of a backstory, just quickly. I promise not to take too much on the intro, but the fact is that my team and I were looking at finding a way to automate volume profile for the longest time. Like, whether it's looking at volume nodes, whether it's high volume and low volume trading, whether it's trend trading, reversals, we were really in the R&D environment looking at volume profile for a very long time until we realized, and actually Jeff, I'm going to give credit to Jeff where credit's due. Jeff, our head of R&D, came to me and he says, I've been trading CWAP very, very successfully following a certain approach, right? And I said, well, let's take a look at it. And lo and behold, months of development went into automating CWAP analysis. And this is how the CWAP Algo came to be. Now, how many of you guys agree performance is everything? Like, there's a lot of great ideas out there, but show me that it's working, right? Like, show me that it's working. Okay. Well, in all of my life, and I've been building systems for a while, every algo that you guys have seen, everything that's come through our gateway, I've been a part of building it with our teams and with our traders and etc. And I'm going to talk to you about why I feel this is a different type of an event. So before we get into the webinar, I'm going to go into this, is that in all of my algo development, I've never seen these types of numbers in all of my years of development. So I went into the trade room this morning and I actually spoke to our inner community because a lot of our retail traders that are trading discretionarily are trading CWAP manually, and they have to manually assess the structure and they have to manually assess the volume analysis, and it's all hands-on. It's very manually done. It's called discretionary trading for a reason. But I went in and I showed them these statistics, and we're going to talk about this today because I've never seen statistics like this in everything I've ever done as a quant trader, which really gave me the reason to want to bring it into NeuroStreet as well. And so I think Jim and I've got plans to bring this algo directly into our trading rooms for a while to give everybody the foot that they need, especially in our communities. So I think this is going to be a really different approach today, and I'm really excited to share this with you. So what I'm going to do is I'm going to kick things off with a disclaimer. Can you guys do me a favor and read this or take a look at it? Give me a Y in the chat box if you accept it, you understand it. We're all professionals here, and that way allows me to get going on this. Excellent. Thank you guys for that. Appreciate it. So we all want the same thing. I'm just going to sum it up into one list. Like, how many of you guys have been to a webinar where let's get through the bullshit, let's get right into the meat? Yeah, like, I'm a straight shooter, right? So this is whether it's a sales webinar or not, I'm just going to be myself on the mic and tell you that it all boils down to money. We're in the business of trading because we want to make money. Yes? Give me a yes or a no that that's an honest, accurate assessment. We want to make as freaking much money as possible. Okay. Well, in order to do that, certain things must be met. And rather than sit here and read this to you like a grade school student, I'm just going to put it on the bullet here and you can take a look at this, right? Winning trades, less emotions, quicker execution, all that stuff, right? Easy optimization processes, just everything that it all goes down into it. But it all boils down to, can I make a lot of money? Is it simple for me to do? Is it consistent? And can I repeat it, right? How many of you guys would agree that? Right? We want to keep it as simple as possible. Whether you're a discretionary trader, if you're an algo trader, the dream is money. Money makes the world go round. Money makes your life better. If you're going to be a trader, it's a business. That's it. So what I'm going to do is I'm going to stop right here and I'm going to start with something different, right? This isn't in the PowerPoints. This isn't everything, okay? As a trader, okay, I'm going to just make this a little bit bigger. I'm going to go to format. I'm going to make this slightly bigger so everybody can see it, okay? I'm going to do something here that we didn't really plan for, but I was thinking about it today. I think it's important. How many of you guys are looking to trade for prop firms, funding companies, evaluation, whether you're with Apex or Top Step or soon to be us when we go live, everything in the name? Most of you guys don't want to trade your own money because you don't have to. Now the industry's changed. Really, it has changed. Why trade your own capital if you don't have to? Unless you're privileged and you've got a lot of money and you really want to deploy it, then I second that. I think that there's advantages to trading your own money if you're at a place to do so, but there's also advantages to trade for prop. If you're going to trade for prop firms, it all boils down to two things: end of day drawdown and trailing drawdown. That's it. Then it all boils down to payouts. Everything else is in between noise. Depending on the firm that you operate with, are you running an end of day drawdown or a trailing drawdown? And once you understand the system that you're going to be trading with, it all boils down to how soon can I get paid, how much, and how often. That's all that matters as a trader. That's all I care about. Myself as a trader, knowing the business. If I'm a prop trader looking at this, I want to know if I'm trading for a prop firm, what is my drawdown risk structure, and how soon can I get paid, how often can I get paid, and how much can I get paid per account? That is the business. Okay. Well, it goes deeper than that. I'm here to tell you that prop firms are not designed for long target strategies. Okay. So let me give you an example. This is a chart. Not really, but I'm going to pretend it is. Okay. Prop firms, let's say you got a support level here. We're going to put support. Yeah. I'm going to keep it super simple here. If you came down here and you buy a support level, a prop firm does not want you taking targets up here, up here, up here, up here, because they're not designed for that. Even end of day drawdowns are not designed for that. Why? Because most end of day drawdown firms, what they do is they have a max daily loss limit. That's their way around that. Is that if you're not using a trailing drawdown firm like Apex, I know Top Step has an end of day, the two biggest players in the space. Well, they both have their own reasons for the way they structure this, but none of them want you holding and swinging for the fences. The likelihood of them being able to replicate that and you catching all these banger trades all the time is not what their business is designed for. End of story. They don't want you doing that. So all of their risk management rules and everything they do is designed for quick targets, quick trades, because they want to see that you can get in and out and take a profit. Why? Because the failure rates are so high in the business. And I know this because I spent the last 2 years building out a prop firm, guys. So I'm speaking from not from the trader's perspective. I'm speaking from the risk manager's perspective on the other side. So why am I sharing this with you today? Because if you're going to be a day trader, the less time you're in the market, the better. Let me repeat this. This is very important. We're taking a different approach today in this presentation. If you're going to trade for a prop firm, which 90% of you are, You do not want to be in the market for a long period of time. So let me explain this then. If you're going to trade a strategy, whether it's a reversal strategy or a trend strategy, the goal needs to be that the system is designed with a quicker distance to target, maximum 1-to-1. And you say, well, wait a sec, that means I need a higher win rate. Yeah, you do. That's what prop firms want. Prop firms want to see that you hit consistently all the time. And the truth of the matter is, traders that hold for big R multiples normally make more money. Why? Because you don't need to be right as much, and you sometimes hit those Hail Marys and you make back all your losses. And I get all that. That's just mathematics, but that's not how the business is built. So what we want to look at is, can you have a system that can accommodate time of market, the distance to target is quick and efficient, and you still get ample trades per day to be able to run your business? This is important. Now, if you're going to trade a system, I believe that 3 things matter, and I'm going to talk about why today is really important. Simplicity. Easy to use, easy to understand, easy to what? Repeat. If you're going to run a business and every single day the markets are changing all the time, and I get that, but if what you're doing is different today than it was on Wednesday and it is on Friday, and all of a sudden you got to do this, you're not running a business. You're in a casino. You just don't even know it. Why am I saying this today? Because I actually want to see you guys get to your end goal, make a shit ton of money, and be grateful for the tools that we build and help you get there. Now, why do I think relevance is important? Because there's some really crazy strategies out there that aren't relevant. Like, there's a lot of things you can do that are just not relevant. And volume profile equals relevant. There's nothing more relevant than price and volume. So what we did was we took everything here and everything here, and we positioned the CWAP to do this exact thing. Why? Because we've got a huge community in NeuroStreet Academy, much bigger than the Algo community. I'll tell you that. And they're all trading volume profile and CWAP, and we've got a lot of volume traders. So we wanted to build the algo to not just cater to the volume traders, but to also cater to the discretionary traders. And I'll explain why. Because discretionary traders, they need to manually structure the market. They need to manually do this. Then they need to manually pick the anchor points and then take the indicator up here on the little drop-down tool, click it, then they got to apply it to the chart, then they got to make sure that they're doing it in the right place. Like, there's a discretionary process that retail traders do when they trade volume. However, we eliminated all that, and we're going to talk about that today, because we've made it so that you don't need to do this. No longer do you need to manually map everything out and plot the volume and do all. We've done all that, and we've also taken it one step further. Is we've added automatic money management stuff, which we'll get into, that's going to make your position sizing completely automated. You don't even need to think about managing the capital. It does it all for you, which is huge, huge, huge. Now, I'm going to talk to you about something here. This is really, really cool. And essentially, we built 3 approaches today. How many of you guys want to be in and out of the market as quick as possible? Like, just you come in, you trade for a certain period of time, and then you leave. How many of that's you? Just tell me if that's a you. Anybody in here? Paul saying yes, Jack, Michael. Okay, great. So all of you that just said yes, this is for you. We have a strategy template that literally just trades the first 30 minutes of the open. And you want to know something? It's insane. It's so insane because it just trades the open, and there's always a volume push off the open. And, you know, Jeff, like, you're the one that built this with us. You just come on the mic and you tell me, when we were testing this, it's the most profitable system we have. Like, it never had a loss.
Yeah, I mean that the reason I wanted to look at something like that is, I have a pretty busy day job. I don't have much time to trade. So, if I come something with it that can do it for the first half hour of the day, I'm happy.
Exactly. Yeah, I don't give Jeff a lot of time to trade, guys. In all honesty, his passion is trading, and he's a volume trader. And when he came to me, he's like, "Can we build something for everybody so that if they're like me, I can just be a one and done trader. Get in, get out, take one good trade off the open and be done." That doesn't mean you only need to do that, but we have an amazing system set up to do that. How many of you guys like a lot of action? Okay. Yeah, a lot of action, right? This is for you. Okay, so for those of you that love trading, okay, and you like taking a lot of trades, okay, this is for you. We've got hundreds of trades on a high frequency setup, okay, and basically this will be for you. The other one is the scalpers in here, which is a cross between, it's a midpoint between the one and done and the high frequency. It's the middle guy, the guy that likes to take a couple trades a day, et cetera, et cetera, et cetera, and et cetera, right? Scalping is for a lot of you, okay? Do me a favor, Jim. Jim, you here?
Yes, sir.
Yeah, Tyson's got to go. Yeah, I already sent
Okay.
him and his dad an email. Yeah, kick him out.
Okay.
Yeah, he's done until his dad replies. Yeah, he's gone. So let me just kind of get into this, okay? In the community, we've got two groups of traders. Algo traders, and we've got the retail traders, okay? Type in the chat box if you were either A or D or both. If you're an algo trader, if you're a discretionary trader, or both. Well, this is the first algo we've built that is going to accommodate both of you guys, because this is designed to accommodate both needs, the algo trading as well as the manual traders, to reproduce what you're doing manually. So now that I've said this, who's listening? This is why I led with this, because it's not, I don't want this to be just a presentation. I really want you to leave here being, okay, this is exactly what I've been looking for, and we can serve this. Now, automation serves certain problems. It solves problems. I believe that it does what a lot of traders have a problem with: emotions, getting in and out of the market quicker, being able to do what you're not able to do manually, meaning accuracy. Sometimes you'll miss trades, or you're looking at other markets and you can't get into the trade. What's nice about the automation on this is that we can do this on a lot of different markets. And it's a simple system, which is what allows you to be able to trade multiple markets, and you can improve your execution. You won't miss as many trades. It's more systematic, and it gets you out of the way, right? It gets you out of the way a little bit. So there's this trade-off between humans and computers. Automated trading doesn't mean you just need to turn it on and let it go. It just means you can turn it on, and you can ultimately manage it, come in and discretionally manage it, run it as a fully automated system, et cetera, et cetera. Yeah. So one thing that you're going to find with us is the ARC engine. Now I'm going to start here for a second. I'm going to go in and we're going to talk about this inside of the ARC engine. Okay, I'm gonna share something with you guys for a second. We're just gonna get in here and we're gonna get into this. We'll get into this in a second, but I just want to talk a little bit about the ARC engine. So inside of our algos, okay, don't worry about this graph. It's not important. We'll get into this in a second. Okay, what makes our systems different than every other auto trader in the business? There's a lot of guys that try to sell systems. I give them credit, but there is nothing in the business that does what we've built. So let me break this down so you understand where ARC's advantage, for those of you that are new in here, is that when you come into NinjaTrader's strategy optimizer or backtesting engine, it's very, very basic. It doesn't have any bells and whistles. It doesn't give you any real context of systemization. So when you come in here, you can select back testing or optimization. Let's just do this here. You can see back test here. I have it set to back test, but you can set it to optimization, right? You can optimize, etc. Outside of that, what we have is we have the strategy parameters. So this is the system. That is essentially the signal. It really is the signal. It's all of the different rules that go into creating the actual entry. Outside of that, this is what everybody else gives you. This is what you get when you buy every other auto trader in the business. That's it. What we've done and what the advantage of using RKI's algos is that you have the ability to come in and control multiple entries, quantities, multiple targets, multiple entries, multiple structure. You have the ability to change between multiple position sizing functionalities. Whether you want to do percentage risk, fixed dollar amounts, money management is very, very critical. And how you optimize and you test is based on money, not just on the signal. You really want to be around the capital on this. You can enter multiple order entry capabilities. You have multiple stop loss functionalities. You have the ability to set targets based off of tick distances, risk reward, ATR functionality. You can optimize on that, which means you're not sitting there just, well, I'm going to have a 10 tick stop and a 10 tick target. You can optimize based on risk reward metrics. You can do all of the fancy things. On top of all this, we've built in time filters where you have the ability to control the session times in which you're trading. You can, if you know that crude oil always has inventories on a Wednesday, you can stop trading crude on a Wednesday, optimize around what you know you would never trade. You can set it up so that you don't trade into the open. You can block times of day where you know that you would never trade, like during lunch. If you never trade the S&P during lunch, you can come in and you can exclude these types of windows inside of that type of functionality, right? And then you have the ability to manage money, which means if, let's say you have daily goals, let's say you come up and you make $1,000 for the day, okay? You can turn on the high water mark and say, if I give back 30% of that, and I'm down to now 700, you can have a hit the kill switch. A little pop-up is going to turn up and say, shut your algo off. You've breached your high water mark. Like, we have rules in place, which you have the ability to do these types of things. Then when you get into the filters, this is where you get a chance to decide, do you want to filter for all signals? Do you want to filter for trend? Do you want to filter for market structure? Do you want to filter for momentum? These are the three primary functions for filters. You have trend, you have structure, and you have momentum. These are the three backbone categories to every single oscillator that is ever built for direction. And so we structured it in a way where you have this built in. It's not even part of the system. It's part of the engine. We've recoded NinjaTrader's infrastructure to be able to accommodate the algos. So why is this important? Well, because it basically sets us apart. Like, it's not about, yeah, exactly, too many choices for optimizing. We only optimize for filters and signals. Everything else is money management. Like, you have to have a handle of that, right? And we have a testing process. I think, Jean brings up a good point, is that where do we start if we have a lot of functions? You start by coming to our algo training week, and I'm going to map you out a process that's going to make this so simple that you never deviate. And once you learn how to go through this testing process, you'll never deviate. Like Jeff and I, because we build so many systems, we've built a testing framework that every single strategy or every single approach that we take, we always put them through the same process, which has led to very good success. And we'll teach it to you, and we'll teach it to you for free. Yeah, it'd be my pleasure. That's what we want. We want to give more education, and we've been getting a lot of requests for more education. And the software is top of the line, guys. Gold standard in the business for automation. We're going to educate you on how to test properly so that you can get the best of, not just using strategies, but become a great algo trader, right? So let's get into the system, okay? So the problem with volume profile is that humans make it complicated. The concepts can be very complicated. Understanding how to draw volume is a process. It's a process that is not done equally. Like, you and I can sit there and I'll draw volume differently than you draw volume. And the next it's like trend line analysis. Everybody draws their market structure, and everybody looks at the market differently. And that's a very big problem, mainly because if you're looking at volume differently, and I'm looking at volume differently, and the next guy is, well, then who's right? It has to be mechanical. It has to be mechanical in the fact that you're not doing it anymore. And that way your trading plan never changes. And the key is understanding, what are you looking at? We're not looking at historical volume for this type of system. This is as real time as it gets. So take away historical. We're not looking at levels from the past. We're trading real time CWAP. And we had a question, how is this different than VWAP? It's very different. Give you an example. VWAP is going to look at volume weighted average price based off bar closing analysis. It's going to be based off of the volume on bar close. So if you look at here, VWAP, let's take VW for VWAP, it's going to be on bar close. Okay. The CWAP, unlike the VWAP, what we do is we go inside of every single candle, and every single candle has a volume profile, right? Low volume, high volume, right? We're looking at the high volume nodes inside of every candle. It's the distribution of volume. It's the cluster weighted average price, okay? And therefore, we take the trend analysis from cumulative cluster weighted average price. It's not VWAP. It's leading VWAP. CWAP will always lead VWAP. And therefore, CWAP is always more responsive. It has a better edge than VWAP, and you will get more trades with it. Now, I'm not saying VWAP is not good, guys. Don't let me, for all you VWAP maxis out there, I'm not trying to challenge the status quo. I'm just telling you this is not a VWAP system. This is a CWAP system. Now, what we're going to do here is we will be automating the anchors on market structure. We will be automating where the volume profile is on the chart in real time. You never need to do anything. The key here is that we're going to be, I'll give you an example. Okay. Money management. If you know that you want to risk 1% of your account on every given trade, and one day your stop loss is this big, the next day your stop loss is this big, what's changing? The position size. 1% never changes. The stop size is what changed. Therefore, the position size needs to be auto-adaptive. With volume profile, it's never the same. Some CWAPs are going to be smaller than the other, and some CWAPs are going to be bigger than the other, which means sometimes you'll have a tight stop, and sometimes you'll have a slightly bigger stop, which means how do you on the fly manage the position sizing to be able to do that? You can't. It's going to drive you crazy. We automatically do that. So this is something that is pioneered on this system because the stop losses are dynamic, which means your money management needs to be automatically updating with the system, which is why I think that this is one of the most superior tools we've built, is because we've integrated new infrastructure for money management. Now, everything we've done is for day trading and prop firm trading on templates intraday. I believe, truthfully, this is the most simplistic trend trading system we've ever done. But it's the only volume profile algo we've ever built. Like it's cutting edge, and you won't be self-sabotaging the way you trade volume, because it literally is as much as turning it on. You don't need to do anything other than turn it on. Okay. So what you're seeing here is the volume, and we don't plot the volume all over the chart. We keep it super clean. These highlighted fluorescent sections are volume bands that are created from cumulative volume weighted average price. And the first thing, I like to call this the 1, 2, 3 trade. And I'll explain why. It's as simple as 1, 2, 3. All it does is it waits to automatically detect structure breaking pivot analyses. Is that even a word? Analysis? Give me a mulligan, guys. I talk a lot here. The analysis of the market starts with structure. Okay. It automatically plots the structure. And then what it does is it takes the anchor points from the structure that led to the break of structure, also known as a boss. And what it's doing is it's shooting the volume in real time out automatically. So when we broke the structure here, the anchor automatically started the volume. It shot into real-time action automatically. We get the pullback, boom, target. Now, what's unique about this is take a look at this. The size of this CWAP is different than the size of this one. Yet your risk per trade is the exact same. Why? Because the CWAP is auto-adapting. Volume profiles are auto-adapting. Your risk is auto-adapting. It's amazing. It's absolutely amazing because it removes the need for you to have to worry. Am I violating, oversizing my trades? Am I trading too much size on this position? Right? And it's looking at the profile inside the bars. Great question, Gene. It's looking at the profile inside the bars. And that's the key. Okay. And it's directly for trend trading. It's 100% for trend trading. Okay. So here's a great example of a long setup. Let's do the 1, 2, 3. I believe simplicity is key. Okay. Markets are trading, right? Boom. Break a structure. There's 1. This would be considered 1 right here. Structure break. 2, the anchor point plots from the pivot that led to the break of structure. Right there. There's 2. 3, it shoots the CWAP into real time. This market's going to trade up and then pull back. There's 3. The pullback to the volume weighted trend trade on the cluster weighted average price. And what's unique about this is that it's all hands off. And we've had very good success trading volume timeframes, volume charts, just mainly from a day trading perspective. I know Jim's got some pretty good templates on time. We've got, it's very clean, Jesper. Yeah, it's easy, visually enhanced. It's not complicated. It's volume leading, right? Because volume is the backbone of the market, right? Just like order flow is the backbone of everything that's happening in real time. Volume is going to dictate if this trend is going to continue. The volume has to be proven before that trend kicks off. And this is the key. Here's another example from a short perspective, right? We come in, right? Here's the structure break. We anchor the CWAP. It shoots in real time. You get the pullback, bingo, bango, right? Just like that. And we're not looking at the point of control, Gene. We're not looking at high volume nodes, low volume nodes. We're not looking at POCs, value highs, value lows. Why? That's a session profile. We're looking at that on every single bar. So while you're thinking on a macro level, I'm looking at it on every single candle. Every single candle has volume distributions inside of the bars, which is what we're taking. We're taking this volume data and we're creating this volume trend band. It's all real-time volume profile. We go inside every single bar. We take the cumulative volume. Essentially, what you can do if you take a candle like this, you could draw a profile like this. There's a big volume belly like that, right? There's the value high. There's the value low. There's the point of control. The point of control on every single candle is what's creating this. Think of it as a point of control trend band. That's a pretty good analysis of what CWAP would be, because this is the point of control. This is the point of control. This is the point of control. And we're taking the volume profiles on a micro level to create the automatic distribution. So your question's not wrong. It's just out of context. Yeah. Does everybody understand that? Give me a yes that I haven't lost everybody here. I want to make sure we're on the same page. Yeah. I get going. I get excited for this because when I get into the performance, I'm like, holy crap. So this was interesting. Jeff and I spent a ton of time testing it on different time frames, and then we just said, hey, Jim, take this algo and run with it. We did it on purpose, right? It was kind of like a test. We sometimes throw Jim into the fire. Hey, Jim,
sometimes.
Me and Jeff, what we did was we have our own testing process, right? But this is like a stress test. This is like a QA test for us, is that we know that it's working on the time frames we're trading it, we're testing it on. And we said, hey, take this algo, here's the user manual, and come back and tell me what you think. Jim took it on a completely different direction. He went and tried it on different markets, MES, MCL, MNQ, and then he traded it on minute charts. Jeff and I were trading it on volume time frames, so we never had any influence in what he was doing. And he came back with his test results, 8 profit factor, 3 profit factor, 4.7 profit factor on markets we weren't even testing. And I said, what do you think? He's like, is this for real? I said, well, Jeff and I have been working on this for a long time. We're going to bring it into the trading room. Do you think that you could trade this in the trading room? You're using this manually. What do you think? He's like, this could work. This could work really, really well. And that's exactly what we did. So this was Jim's kind of claim to fame. I like to kind of put, he really put in a lot of time, but Jeff and I had no involvement in it. And this was when we knew that this was in a different realm from an auto trader to being a solution for not just the algo traders, but for the discretionary volume traders as well. How many of you guys in here are in the NeuroStreet trading room right now? Give me a yes if you're in the NeuroStreet trading room on a regular basis. Every one of you is using the manual profiles manually. You're having to do all of that manually. What if I came in there with Jim over the next week and we taught you all the price action setups that we were talking about today, and then you just ran the CWAP on an algo template without having to do that anymore? You got your auto trader running on the side while I'm teaching you other setups on the price action, which gives you more activity, and you can have your volume trade on the side just crushing it while we're teaching you some of the other price action stuff that we were talking about today. Wouldn't that be an amazing solution when you don't even have to do all the manual stuff anymore? That's exactly where this came to be. This is why I was saying this. And this is the direction that Jim and I want to take this for a while anyways. Obviously, we want to get you guys trained and et cetera, right? And so give me a yes that you guys think that'd be a great idea. I just want to know for all of you guys that are in the trading rooms with us, give me a yes if you think that'd be a great idea. Okay, great. So let me kind of keep going here. I'm just gaining some steam. So one of the things that we do, and this is by far nowhere near the templates that we finished with, but I just want to kind of bring something home. Okay. Optimizing is not the end of the journey as a trader. So let me just explain this. The only reason we optimize, can I ask anybody here, why do you think optimization is important? Why do you think testing is important? Can anybody here give me a reason why they think it would be important? Because everybody always pushes back on test results, right? It gives two things. It gives some form of evidence. It gives some form of evidence that historically it's been working. But it also gives us as human beings some form of comfort to know that it was working in the past. That's no different than any of us, if we were all in a webinar, or let's say everybody joined hands and we went to a big conference and we pulled up this big screen and we all looked at the markets manually and we started manually backtesting a new indicator or a new idea. The whole point of testing is to give us some form of data that it's going to work for us. And all that data does is make us feel all warm and fuzzy inside to think, finally, this is a better edge. How many of you guys would agree? That doesn't mean that what we optimize is the holy grail or that it's supposed to be the only solution. And I don't believe in that. I think that curve fitting is the enemy. I think that if you're sitting there over optimizing and you're trying to build this perfect template, you're doing yourself more worse harm than good. Why? Because that's not really algorithmic trading. That's making yourself look good and feel good. And then you go and trade it in real markets and it slaps you in the face. So what we do with ARC is we spend a copious amount of time in R&D building the systems. And then we spend even more time testing the systems to build ready-go templates. Why? Because it would not be fair if we just said, hey, we coded this algo, we showed it on a chart, and we said, here we go, guys. Go and figure it out on your own. Go test all these for the next 2, 3, 4 weeks. Tell me what you come up with. You're not being paid to beta test software. You're not being paid to be an R&D research analyst. I've got Jeff and myself and other guys that spend a lot of time on our payroll doing all this so that you guys have at least something that's a hell of a lot better than you guys would be doing on your own, that is going to give you evidence and it's going to give you comfort that there's been historically really good success with it. Then what we do, and normally what I do, is we run it forward in what we call a walk forward environment, right? Walk forward testing, which is technically a more realistic form of Monte Carlo simulation. Monte Carlo is like a randomizer that just spits out randomizations inside of the strategy analyzer. However, a walk forward environment is real-time trading. And normally what we do is we take the templates that we build and we deploy them. No different than if you spent a whole couple weeks back testing something manually, then you build a trading plan and you say, okay, I'm going to take this and I'm going to go and trade it next week. I'm going to start my trading plan. I'm going to start logging my trades. How many of you guys have done that? You mark up your charts. You think you got a good edge. You then log your trades. Once you start, you say, okay, I'm going to start on a Monday. I'm going to start logging my trades. Right, exactly. And so what we're doing is we're already giving you everything you need to do to just hit the ground running with our pre-built templates. And I can promise you this, that we spend more time in testing, making sure the templates are solid than we do actually building the system sometimes. I truly believe that. I think we spend a whole lot more time testing validity than we do actually testing code. It's the only automated volume profile algo that I've ever seen out there next to order flow analytics platform. For those of you that have been around as long as I have, if you remember OFA, DB Velo back in the day, he ran order flow analytics. He's still got a platform. I think it's on AMP Futures right now. The guy was a great trader. He pioneered some great things. This is the most simplest yet more flexible way of what I would say they tried to do at a platform level. We just simplified it. And we also put it in an automated way where we could actually back test it and actually test feasibility on it. They took it to a different direction. This is more geared for statistics and actual trading versus just having really nice software. And the reason I've done this way is that we want to automate everything from the start to the finish. And I really think that when you take this, please note that we're not legally allowed to tell you how much money you're supposed to be trading, which is why I wanted to have this slide. When you get our templates, please take a day, take a look at the templates and ask yourself, what is your risk profile? Just don't take the templates that we've built and just go trade them without checking the money management. That's not fair to us, and it's not fair to you, and it's not fair to your prop firms that you're working with to just, you might be on a small eval, risking $500 a trade is not good. Maybe you want to risk $100 a trade, maybe $250. Maybe you're trading the big daddy accounts and you want to risk $1,000 a trade, but just make sure you adjust it. Can you guys all give me a Y in the chat box that you agree to do a little bit of time, watch the training videos, update the money management. Don't be that guy that emails me, say, hey, Sean, I don't know what's going on here with my algo. Okay, please just give me a little bit of help here, guys. I just need that. Okay. So I do not believe in black box systems, which is why we put this in here. Everything we do allows for you to come in and manually override the systems. In fact, some of the mandates for Apex and some of the other firms, they will not allow a black box signal provider, mainly because you have no control over it. So what we've done is all of our algos are compatible with Apex and all the prop firms. It's geared towards gap traders as well. It's meant for both semi-automation and fully automated trading. I think it's very important I discuss this because a lot of people always ask this, is this a black box? Can I come in and turn it on and off? Do I have control? Yes, yes, and yes. Okay, so this is really, really important that we discuss that just so you understand it. Okay, so who wants to see a demo? You guys ready? I want to talk a little bit about the different templates that we've done. Okay, let's go in here and do this. So I'm going to start with this one. Now, This is the one and done. For all of you guys that are just looking for one moonshot trade a day, maybe two, depending on how active the open is, this is the one and done template. Okay. And if I go in and I take a look at the analysis, let's go break this down by day of week, half hour day, daily. Let's go in here, and there was some days it didn't take a trade. So just to understand this, there were some days over the past month it didn't take a trade. Just the way the open set up, didn't take a trade. So it kind of makes sense considering we were coming in right after the holidays, less volatility. Why do you think the first 2 weeks of January has less movement? Choppy markets, less follow through. End of year tax balancing, end of year fund balancing. Traders are coming in off the holidays. They're probably having meetings, whatever the case may be, vacation, right? Restructuring management on the trade desk. Who the frick knows? I'm not in the institutional prop desk. But I can tell you right now that as soon as the volume kicked back up after the first 2 weeks were done, look, the last 2 weeks, every single day that we ran this, okay, just hit it. Like every single day that there was trades, hit it. Now there was some trades, we had some big days. Like there was a couple bigger days in here. This is only the one and done template. And it's not meant to take a lot of trades, guys. This is literally the first 30 minutes off the open. But I don't know who you are or what you would say, but how many of you guys every single day this month took 1 or 2 trades off the open and produced these types of results? Give me a yes if you beat this just trading 1 or 2 trades off the open. Maybe there's a few of you that are really great traders, but how many of you guys beat that with a 93% hit rate with a 0.6 R multiple? Remember we talked about in and out targets for prop trading. That's the whole reason we did this with a 93% success rate. Now I know there's going to be some of you that are going to say that's not a huge sample size. No, it's not. But this is also a very, very short time window. So we're not trying to create a very unhealthy trading environment. Okay. So trust me when I say this, that you only get so much time as a day trader basically to be able to trade the open. It's only 30 minutes a day. You only get a window. During this window, it's been insane with a 9 profit factor. That to me, I have never seen this. Even with the HFT algo, which was, we put it off the open, I've never seen it. I've built a lot of systems. That caught me by surprise, right? And so this was what this system did. Very, very clean, very easy. You're not going to have a lot of trades with it, but it's going to do exactly what this template's been designed to do, to trade the 30-minute open, trading a volume pullback, and you might get 1 to 2 trades every open when it hits. How many of you guys think that you could implement that simple, easy, effective, up and running in 1 day or less? I think that's clean. Exactly. Exactly. It's dummy proof, right? That's critical. Okay. Now I'm going to transition to the high frequency guys. Okay. How many of you guys like a lot of action? Okay. This is the lot of action trade, right? This is the lot of action trade. This template ran since the 2nd, right? So really the 3rd was the first day that it traded and crushed it, just crushed it. 2 losing days. Okay. Very small losses. This had 100 trades this month. So 0.6 R multiples, a little over 0.5. Why are we doing this? These are designed for prop firms. Why? Quick targets, boom, get in, get paid, done. If you're copy trading, you want that because you don't want to be in the market exposed and hitting your trailing drawdown. Like a lot of you guys, if you're in the market for much larger trades, you're at risk of hitting your trailing drawdowns. And this 100 trades, 0.6 R multiple, 80% hit rate, 2.4 profit factor. And this is just trading the morning on the markets. Very, 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 very consistent. 15,000. This is risking $500 a trade. Now, like I said, I just went into money management. You don't need to copy that. If you're risking $250 a trade, cut that in half. That means you would be at what, 7.5, 7,500. Your drawdown would be $750. right? So if you were to cut this in half, $7,200 with a 750 drawdown. If you're risking, let's say, $250 a trade. Okay. Even if you're risking $125 a trade, you're still at what, 3,500 at that? It's 3,500. Cut that in half. If you're risking $125 a trade, you still pass the eval with less than $500 drawdown. This is the high frequency template. This is the HFT template for the trend trading. And this is going to give you, this is what it's done, right? This is what it's done in the platform. So let me just show you this. This is going to give you a whole lot more action. Okay. And just depending on what you do, here's a great example, right? So here's a great example of the morning, right? This gave you long trade target, short trade target. This was a short trade stop, long trade target. Now, this is not designed to take this whole meat. This is not what this is designed to do. This is to do with this is what we consider a volume bounce trade, right? And this is really, we just call it high frequency because it's got a lot more trades. This is really not an HFT. I mean, HFTs are trading hundreds of trades a day. We call this a high frequency setup because it's high frequency to the one and done. I mean, it's that simple. You can see here was a stop, here was a win, right? It's that simple, right? And let's go back, find a couple more trades. I'll show you this. I'll just show you the one and dones. Let's go back here, right here. And it does it all for you. This is what's clean. Like, this is the cleanest system we've ever built. Like, it's that clean. Like, so let's just take a look at these trades for a second. Okay, right here. Plotting structure, break a structure. Anchor point plots the volume profile. We get the break of structure, pull back, target, done. Here it is. The anchor breaks the structure. This CWAP plots out. It comes back off the break of structure for a retest, kicks the volume, and done. Here it is. This was the break of structure. Anchor plots the CWAP, comes in, hits that, hits the target, done. This one comes back. Even in an oscillating market, this is why I loved this, was because most people think trend trading is meant for trending markets. Well, that's the problem. Most people don't know what they're talking about. In a trending market, great, trend trades work great. In an oscillating market, most trending trade systems get smashed. We found that having tight targets, we always got a reaction off the volume. We always got a bounce off the volume enough to get paid. If the trend kicked in, like I'll give you an example. This one came in, hit the trend. You could have got a lot bigger target. We don't care. This one came in, hit the trade nicely, got a really big target. We don't care. We were out here. This one came in, hit the trend trade, got our target. Great example of this trend didn't continue. We still got paid even though the trend didn't continue. Came back down, trend continued. So out of all four of these trades, 3 of them continued for a big push. 1 of them didn't, but it still did its job the same on every single setup. And this is the difference between having a systematic scalping approach versus trying to always be right. Algo trading is not about, wow, that trend worked. Wow, that pullback worked. No, trend trading is doesn't necessarily mean you need to be trend trading for big moves. Does everybody understand that? So Donald, just cut these results in half, literally in half. The metrics for this would stay the same. The average trade risk would stay half. The average trade risk would be different, but the money would just be cut in half. If you're risking $250, it would be just literally half of everything. Yeah. Makes sense? So what I'm going to do now is I'm going to come to the middle point. And the middle point is where a lot of people are. They're looking for the scalp setup, right? So essentially, they're looking for the scalp trade. Now, I'm going to end with this, man. They said to save the best for last. This to me blew me away. Like, this was a 0.4 to 0.5 R multiple, same approach as a scalp. Okay. This is, to me, I'm only trying to, let me give you an example. Let's draw a little line here. I did this a long time ago, and it's been a long time since I taught this concept. Okay. Let's say I'm dropping a ball. Okay. This is me. Hi, I'm Sean. I'm a quant trader. Okay. And over here, this is the retail guy, and he's swinging for the fences. Okay. So let me ask you this. If I drop this ball down, okay, what is a guarantee? Like, what is a guarantee? Gravity is a guarantee, right? We know that if I drop this ball, it's going to drop, but it's most likely going to drop this. It's going to bounce up that much. It's most likely going to bounce up maybe this much. It may bounce up this way. It may bounce up that way, but it's going to bounce a little bit, right? Maybe once every 100 times, it catches a big bounce and it goes that way. But that's a maybe. That's what this guy's doing. He's hoping that he bounces the ball, and it always does this. And that's the guy that's paid for 150 eval accounts. That's the guy that doesn't understand anything about trading and is hitting his head up against the wall. Because an algo trader is going to realize there's an edge here. If I just try to take a little bounce out of the market, and I can actually do that all the time, and it's consistently hitting all the time, my brain waves are going to change, and I'm going to stop trying to do this, and I'm going to realize there's a freaking edge here. There's an edge here. And over the last 44 trades this month with this template, we had a 97% hit rate with an 18 profit factor on this template. Now, that's not a huge sample size, but as a day trader, if anybody in here took more than 44 trades, if you send me your trading log right now for the month of this month, and you have logged 44 trades or more, and you beat that, I'll give you a license. I'll just give you the software for free. Can anybody here do that? When I seen this, I was like, what the hell? Like, I've never seen that before. As a day trading system, I've never seen this before in my life. And this is why I was so excited to share this, is because ultimately this is geared for prop firm trading. And if I come in here and I look at the analysis on this, this was the results this month. Now, these are on the NASDAQ. Every one of these, I think, Jeff, these were NQ templates.
The micro.
Yeah, the MNQ, not the full size. Yeah, these are all MNQ, right? And I mean, I think Jim tested other markets, but this is for the MNQ. You could definitely do things on the MES. Just takes a little bit of time to test them, but these are already plug and play for the MNQ because it moves. The MNQ gives you movement. The MNQ gives you volatility and volume, exactly what any day trader needs to make money. Now, we traded these on the 100 volume chart. That's good for you to know, Jim, for the trade room, that these are all geared for the 100 volume time frame. So until we get new templates on time charts and everything else, it'd be really good for us to bring in the 100 volume chart.
Show notes are 1,000 volume.
That's what I mean. Yeah, 1,000. My mistake.
I know
1,000 volume. Yeah. You guys know what I mean, though. Yeah, it's been a long day. But this has been the system this month. And if we go back and we take a look at half-hour day, right? We stopped trading. This is my lunchtime. So this is the European close into lunchtime. So we're not trading lunch. That makes sense, yeah? How many of you guys agree that, you know, most people don't trade lunch? We cut it out. So that's why we did it. We just don't see the movement during lunchtime. So as a quant trader, we shut it out on purpose, right? If we come in here and we look at daily, okay, this has been the daily results on this template. Pretty freaking good. Now, even though the half one and done trade didn't produce any setups in the first 2 weeks, this template did. Maybe the volume picked up a little bit after the open. Maybe it took a little while for the day to kick off. Who knows? Great question. We have a question in here that says, can we trade all of them at the same time? Yes, you would just need to run them on different accounts, right? So let's say if you're running 3 prop firm accounts, you could run one template on each account. And that way you could trade all 3 at the same time. Absolutely. Absolutely. But I mean, this is insane testing. Like this is, I don't even care who you are, man. Even as a discretionary trader, and you got those pro guys out there, they ain't giving you, they can't give you stats like that, and they're winging it. Nobody can model what they're doing. They're just one of those diamond in the rough traders. That's like the Wayne Gretzky's. Nobody was ever as good as Michael Jordan or Wayne Gretzky. They played the same game as him, but they never did what they did. And not everybody can replicate the best of the best of the best traders. So take something like this and change your business, right? That's the way I look at this. And literally, this is risking $500 a trade. So if you're somebody that's saying, well, that's too much, okay, well, then cut it in half. $250 a trade. Yeah, Paul, that's a great answer. He says, I could trade the one and done after the first half an hour and then switch to the other templates. I never even thought of that. That's a great approach, Paul. Yeah, that's a great way to approach it. Yeah, absolutely. So, if you look at this, when we said the title of the webinar, it's 8+ profit factors. Like, I wasn't joking. Like, I just didn't want to put 18 because people would think I'm full of shit. It's just the reality. So how many of you think you guys could get your head wrapped around this? Like, seeing what I'm talking about, this is next level stuff, guys. Right? And it's simple, it's easy, and it'll happen every single day. Why? It's volume. It's volume profile. And here's what I feel. Here's my opinion. Okay. I love order flow. In fact, I'm an order flow maxi. That's why I built the HFT. Let's compare order flow to volume. If I were to compare the HFT algo, it's one of the best selling systems we've ever built. And it's one of the most used systems in our network because we have a lot of algo traders. And I were to control the CWAP algo, I would argue that 100% of everybody that uses the CWAP algo is going to get equal or better results, and their life is going to be 100 times simpler. Why? It's super simple, and it's easy and repeatable, which means, and to be truly honest, okay, I'm straight shooter. The HFT was a huge hit with most order flow traders. Did not even come close to this performance. In fact, in all honesty, we keep pioneering new ground as we build systems. We just keep learning and we keep growing. And sometimes we develop some amazing things that even shock the hell out of us, guys. Like, and I'm just being straight with you. Like, we don't know how well systems perform until we code them, until we test them, until we trade them. And when we bring something that's awesome, how many of you guys like when we bring innovation to the community and you guys get a chance to leverage things that are amazing, right? I mean, we're always developing and we're always expanding. And, a lot of people give us a lot of hard times. Oh, you guys sell too many things. Well, we're making new things. Like, we're building new development. Like, that's our company mandate, right? It's like, why would you ever get mad at Apple for building new phones? Why would you ever get upset with GMC for building new trucks? Like, they're going to build new versions all the time. And that's what we do. We just pioneer new ground, right? So let me just play this. I'm going to do this. I'm going to share my screen. It's a great example. So I'm going to play this demo. Okay, Jim filmed this for you guys. So,
hey everyone, Jim Simmons here with NeuroStreet Trading Academy, here
yes.
to demonstrate the all-new CWAP Algo. This is an auto-anchoring, auto-updating, volume profile algo trader. It's the only one of its kind. We're very proud to be able to bring this to our trading community. So let's go over a quick demonstration. How does it work? What we have here is the market's creating new highs, gives us a pullback, breaks through structure from this pivot, and then we have a CWAP that gets plotted off of this pivot, and ultimately the market will trade off of those levels. So what is CWAP, you may ask? Well, you're probably familiar with VWAP, which is volume weighted average price. It is a volume weighted analysis of price. Think of it like a moving average, but volume weighted. The CWAP then, instead of taking the volume from the entire bar like a VWAP would, we only take the highest concentration of volume for each bar, also known as the cluster of volume. And we use that then to create a weighted average price and this becomes our CWAP, as we can see here. It's really a more dynamic, more responsive VWAP, and CWAP's a really great tool to trade with. So without further ado, let's go ahead and see what the algo can do. Here we go.
So we're just going to play this forward. Yeah, this is on a time chart. So this is a great example, Kay, is like I said, like he was testing it on time charts. We were running it on volume. It worked exceptionally well on everything. I mean, it's volume. So it's, you know, you could trade it on anything, you know, anything you want.
So on our MCL chart here on the right, we can see we've got our first CWAP that is now developed. This is coming off of a break of structure right here, and you can see the CWAP automatically plots for us. It automatically anchors, and it auto updates to the hard right edge of the chart. Really slick. Let's see if we get a trade on this one. So there's no trade yet because the market came just into the CWAP but didn't pierce the line.
Great question, Kay. We show time and volume. I'm not sure if you've seen the PowerPoints. We were showing statistics on time charts as well. Yeah. I can show you the slide again too, and I'll show you the back test and the historical results for time. Yeah. We have both.
Okay, so we did not get a trade in here, either due to filters or due to the fact that it didn't pierce deep enough into the CWAP. We have a new CWAP that's just been created here. Well, let's see if we get some follow through and get a trade on that one.
I believe you can front run, Rick. I'm not sure. Jeff can maybe answer that. Can you front run the CWAP?
Well, what you can do is you can change the width of the deviation band, the CWAP band.
Okay, here we go.
If you make it wider,
then you can see in this one it went just deep enough.
It'd be like front
running.
It
was able to actually pierce the CWAP, and that's what caused the trade. Really, what we're looking at is the bar before what was the CWAP. So if we come over here, and we can see that the CWAP was just here, and it never got below that 77.83, which is why this never really triggered. You can see even here on the bar previous wouldn't have triggered that. So that is normal. That's exactly how it's supposed to work. And so we've got our first trade. Let's see if we can catch a target here.
You're going to see that the MES and the NASDAQ pump up pretty much in tandem. And you're going to see that, you know, as it...
Now, while this trade is going, let's take a quick look at risk reward and how we've got this set up. Now, this algo, the way that we've got the stop set is to go below the other end of the CWAP. We can see that the system has given us a buffer here. It's set to 10 or 20%. I can't remember the exact number on the settings, but you can set this to whatever number you want. So if you want it to be 1.5 times, 120, whatever you want it to be is fine. You have two choices in terms of your target. You can set it to based on the swing high, a percentage of the run back to the swing high, whether that be 70, 80%, or you could even set it to a Fibonacci number and have it as an extension of sorts. Now, the way that we have it set in this example is we've got it set to a reward multiple of the stop. So in this case, our stop is obviously always 1. We've got it set to a 1-to-1, meaning that we're looking to target 1 times the stop. So the same as the stop.
Yeah, it comes with the structure. It's automatically built into it. Yes.
Okay, so we've hit our first target. We got a nice clean entry. Really didn't take too much heat on that one. It really responded nicely off the CWAP, and we were able to take target just beyond the highs. Let's see if we get any other trades. We've got 2 other CWAPs that are pending here on MNQ and MES. And by the way, these are all 3-minute charts. Let's go ahead and see if we get any more trades.
So you're going to see it's going to come into the CWAPs. Is going to trigger on the S&P. Yeah, you can manually control the exit, Robert. Absolutely. You can step in and override it. Absolutely. All of our algos do that. Yeah. So we'll give it a second here. Missed the CWAP by a tick. You're going to see it came close to the CWAP. And you really need to tag the CWAP. There's another break of structure on the S&P. And you're going to see that it's coming in here. You can see that it missed the CWAP at the lower section there, but it automatically formed a new break of structure, and volume is lifting there. So it's going to come in and it's going to trigger. It's going to trigger the volume when it comes back into it. You're going to see when it comes back down. Watch this. There. We don't.
So it looks like we got some correlation here with MES and MN.
What's nice about this algo is that if you don't trigger on the CWAP, it just keeps going. Even if you get a new CWAP, you could catch this trade, it could hit a target, then come back and catch this trade back to back. Sometimes you're going to see, you can see that you'll have 2 trend trades or 2 pullback trades back to back, and that gives you the ability to trade both of them. You get multiple trades. Yeah, multiple trades.
Q, they did just fire off at the same time for the most part. We've got 2 trades that are going at the same time here. Let's see if we're able to take some targets. You can see we've got targets above the high on both of these. We can see the stop has gone below the other end of the CWAP.
Now let me stop for a second. Everything about the CWAP on every one of these is they're different sized. So when you set your money management, it's going to auto adapt. So you're not having to sit there, okay, how many contracts for this trade? Oh, how many contracts for that trade? You sometimes will take a tight stop and sometimes you have a big stop. Your money management will be dynamic based on volume, which is exceptionally cutting edge.
Zone. And so we've got a nice little buffer there on each of these. Let's see what happens here.
Yeah, this works with any markets, Serenity. You can trade this. If you're using an MES, just switch to the full contract. The only reason we demonstrate micros is some people trade micros, some people trade full lots, whatever you want. It's 10 micros is the same as 1 lot.
Okay, so we are past the cutoff time for taking new trades, so we won't see any new trades. The system will let these trades play out. It's not going to close them at the end of this session. It'll let those run out until it hits a target or a stop.
Volume drives the market, guys. Like, it's price and volume.
Okay, so there you have it. We just hit target on the other 2 markets.
So this is a great example of just watching it run in real time. Like, Jim never did anything. He just turned it on. Yeah, it is mind-blowing, Serenity. It is mind-blowing. Yeah. Would trading micros help with dynamic money management? Trading micros is really about just, are you capitalized to trade size? Most people aren't trading the NASDAQ full contract, so they will trade the MES, and then they'll trade the MN, they'll trade the ES or the MNQ if it really boils down to size and commissions, right? So
life is beautiful. We've got 3 trades, all wins, and we can see that they're very clean trades, came right in, right out, and took targets. Ultimately, at a $500 risk, we're at $1,500, $1,573.25 to be exact. So really a great opportunity to let the algo do what it's supposed to do. You can use this on multiple markets. That's the way I would personally run it, because as a trader, really we don't ever trade just one strategy on one market, and you don't want to really pigeonhole yourself. Some days, some markets are really great. Other days, other markets are great. So why not make the most of it? So that's it for now. We'll see you all in the VIP training, and we'll go over everything that can be done with this tool and exactly how to optimize it. We'll see you there. Until then, traders, take care. Cheers.
So that's that. So hopefully you guys enjoyed that. I mean, it was just a video demonstration. I think it's good to see it in action. We've come to the time where we get to give a license away. I think, Jim, I don't know who's won. I know Chrissy sent you that. We normally run contests. I don't know if they're here today.
Yeah, they are actually. I see him here. KJ, you are the winner, my friend. So congratulations. We'll send you that license. I'll get it over to you right now. Keep a lookout for the confirmation email. And thanks for the referrals, and glad to have you here. So congratulations.
KJ, type in the name or the email or whatever in the chat. So who KJ won it? I don't know if it's K as in J or if it's actually K spelled out KJ. KJ Akhtar. Yeah, KJ won. Good job, brother. Yeah, Lady Luck's on your side. So do me a favor. How many of you guys are excited to get this in action? I mean, I know a lot of our guys on the NeuroStreet side are going to want to take this and deploy this immediately. What we're going to do is we're going to go over pricing. Okay. We always discount on the launch, mainly because we want to give value to everybody who's supporting our business and ultimately give you guys a discount. We do these every 2 weeks. We've got probably another 100 coming in the next 2-3 years, right? But today we're going to give you discounted pricing, and we always do discounted pricing on the launch. Okay. And then we'll go over the AMA stuff and everything after that. Okay. So 50% off on the algo. Okay. The retail price for the automated CWAP system is $14.97. We'll give you 50% off. Okay. And you've got till February 1st to purchase. It's going to give you the license. You're going to have available licenses and updates on NinjaTrader 8. It's a one-time purchase, but you get it for 2 computers. We have full detailed user documentation. We've got a Discord thread for this algo. We've also got an AMA and training that's going to be taking place tomorrow. If anybody in here is new to Ninja or they just want to get help installing it, my team will log onto your computer and get you up and running. Plus, we already filmed a pre-built algo course for you. You will get the algo course if you're new. The big thing here is the templates, right? Like this is what takes us the most time. In all honesty, we could be charging for these templates. To be fair, we give them for free. It takes weeks to get these ready, guys. So everything that you're seeing here that's produced these templates. So I'll give you an example. If I go here to hit load, there's 3 templates here. These 3 templates that we've built for NinjaTrader, you will get them. So you don't have to worry about trying to figure them out and all that fun stuff. Okay. And yeah, so what I'm going to do is I'm going to just kind of touch base here, and I'm going to go over something. We've created a new policy with ARC, mainly because we've got so many customers and so many happy people, and sometimes people aren't happy, right? Like the reality is that we can't please everybody. We can die trying, and we do our best, but we've implemented a love it or swap it guarantee. What that means is that you can buy it today, and for whatever reason, if you are not 100% satisfied with the product, you can swap it for another product in our company with equal or lesser value, right? What does that mean? ARC's got over 100 applications, both indicator and algos. I think we've got up to 15 auto traders on there now, and just keeps growing. And we've got, I think, over 60 or 70 indicators on the site. So if you find that, this ain't for you, but you loved it, and all of a sudden you said, I'm going to want something else, you have 30 days to swap it. So you don't have to be locked into something if you don't like it. But it's our way of saying that we stand behind our products and we've got your back. Okay. Now, tomorrow we are running an AMA. We run these for only customers. Why? Because we really want to just work with the people that are using the product. In all fairness, it's called product training for a reason, right? We are going to go over a deep dive. We're going to go over a deep dive on the signals themselves. We're going to run them. We're going to talk to you about how to backtest the settings in the strategy engine that we built. We're going to talk about optimization and regularity. We're going to go over money management and how to run and trade the systems for prop accounts. Jeff and Jim will be there. They're going to be taking this and they're going to be with you guys. It's only available for customers. So you will need to buy the algo if you're going to come to this event. We only open these training events up for our clients. And therefore, yes, you've got a couple days to buy the algo, but if you want to be in this event, you got to buy the algo today, because you're not going to be able to come to that event if you don't, right? So, and the reason for that is in the past, we've opened it up for free. And to be honest, it was just a distraction for us. Like we had so many people in there that just, back and forth, they just weren't really committed in using the tools. And we really only want to work with people that are 100% behind what we're doing. I mean, it's a business of trading, and we want to work with people that are in it to win it. So I think that's fair. And I think that's understood, right? So I want to thank everybody for being here. I'm going to put us back to this slide. The event is recorded. Yeah, the event is recorded. And what I'm going to do is I'm going to run a poll. The reason I run these polls is really to gauge 2 things. I need to gauge how many people we need to help with support. And we also need to gauge who needs help with sales. Like if you have questions, and et cetera, et cetera. So let me just do that here. I'm going to run this poll, and just tell us if you're going to buy it or not. We just want to know, because we need to know how many people are going to need help with licensing and installation. And then ultimately, we also want to know how many people are going to be joining us for tomorrow's AMA. We really want to prepare for that. And if you need help or if you have questions, that's why we have the other answer, is because if you need to talk with somebody, you can talk with us. And that's really why this poll is here. So please do me a favor and fill it out, guys. It's either one or the other, right? And if you don't want anything to do with it, or you're not completely sold, then don't answer, right? But if you know you're interested, you're ready to buy it, let us know, please. We really want to help you. And then if you truly need help with our sales department, just let us know, and we're going to follow up with you via email, and we'll get on the phone with you guys as well if you need help. Yeah. So someone's asking, why is the HFT algo the most expensive? Because it costs us the most amount of money to build it. Yeah, years of development. Yeah. We really do offer fair pricing structure. Yeah, it really boils down to resources out versus resources in. Yeah, we're just transparent about that. So let me read here. I got tons of questions, guys, so please bear with me. And do me a favor, please answer the poll. I know it gets exciting. You got questions, you're writing them in. Fill out the poll and then write in the questions after, or send an email after. But let us know the poll is really important to us, so we can help manage expectations and we can help manage everybody. Yeah. Yeah. Joseph, that's a great question. Joseph is saying, I had my eye on the Springboard Algo, and looking at this system. It's hard for me, and I'm going to just be honest with you, as an honest person should be. Not that I'm not honest. I'm just saying, for me to answer these questions, I'm just going to tell you straight. We get this question all the time. Which algo do you like the best? Or which one should I buy the best? I don't have an answer for that. I have a preference for that. It really boils down to who you are. If you love price action and all you want to do is trade price action, then I would buy the Springboard, because if you had your mind on the Springboard, then that's a really, really good system. Really good. It trades trends and reversals. If you're a volume trader, there's no question. Then obviously this, right? It's the only system we've ever built for volume outside of order flow. Yeah. But it really boils down to what you prefer. I know traders that will buy both and trade them both, and it just depends on your budget and depends on what your preference is, Joseph. So I hope that answers your question. Yeah, I don't think one is better than the other. This has better performance to some degree. The Springboard has a lot more trade activity because it's a price action system, so you have a lot of trades on the Springboard. It's really both a preference. They're both amazing. They're really both amazing. Yeah, it's a tough question. Yeah. Yeah, we'll send out a recording. Harim's asking a great question. Is this similar to Algo X from OFA? It's similar, but it's not the same. Yeah, it's very different. Ours incorporates market structure and SMC. Ours requires structure breaking pivots and analysis. Algo X is just rotations on volume. Great concept. I actually studied OFA a lot as a trader years ago. I have a lot of respect for DB Velo. He's a great trader, and he's done very interesting things in the industry with volume. Yeah. Yeah, Jim's here. Paul, if you answer that, if you want to send Jim a question, yeah, just put it in. Thomas says, thank you for your whole team. I love your products and your customer service. This one is pretty exciting. I can't wait to test and deploy it. Thanks, Thomas. Appreciate it. Yeah. Ronald says, I'm going to buy both the Springboard and the CWAP. Thank you for your business. It means a lot, Ronald. We really work a lot to help a lot of people. Yeah. So we have I can't go into too much details on TickBlaze just yet, but we are going to open up a legacy option to come in and support our beta release. When we launch TickBlaze, we are going to create a policy for anyone that comes in and supports our beta launch, becomes a customer of ours, and supports the life cycle of our development roadmap as we bring the products in, as we bring the algos in. We're going to do something better for everybody. We're going to open up software for everyone without purchasing some of the products. So if you're buying something on Ninja and you come in and you buy TickBlaze under the beta with us and you support us as we grow through those life cycles of launching the platform live to the mainstream market, you won't have to worry about buying a whole lot of other software. We're gonna grandfather in a lot of people on a lot of products if you're supporting the beta. Yeah, we're really going to go to town and help a lot of people and really reward the business and really reward the customers of our client base. Yeah. So don't worry about us going to TickBlaze and not having to have access to products and stuff like that. We're going to do one better. You'll still have access to Ninja, but you'll also have the ability to grow with us through the evolution of TickBlaze and then not have to worry about spending exorbitant costs. Plus, once you hear about the partnership we have with the data vendor, you won't ever have to pay for market data. So it's a no-brainer what's going to happen. Yeah. Yeah. Yes, you can create HFT templates in the Springboard and in Volume. Yes. This cannot run on Tradeovate. The development in Tradeovate will not accommodate the custom development. That's why we do it on Ninja. Yeah. Harim's asking a great question. How do we adapt to the market conditions? By monitoring the performance. Yeah, the only way you can adapt is by monitoring the performance. When the algo starts to scale and do very well, then don't touch it. If for whatever reason you see a drawdown happening, you need to assess, was it something that was done in the market or is it something that needs to be adapted on the template? And that's just systemized template trading, and we'll cover that in the AMAs. Yeah. Works only on Ninja at this time, Jesper. Yeah. So I want to thank everybody for filling out the poll. Yes, Joseph, the scalping runs in the morning. I can't remember which one was the afternoon as well, but I'll have to check. Yeah, but yeah, most of these are the morning. Yeah. Yeah. You may not see it if you're on a mobile device or an iPad or something. You might check the pop-up. I'm not sure if you see the poll, but we're just asking if you're buying or if you have questions to contact support. We just need to know who to contact. We don't like to bother people, right? We send enough emails as it is. Give me a yes that you found this event good. You liked it. You're excited about it. Did we do a good job? We're always looking for feedback. Some of the haters in here can flip me the bird, whatever you want. That's fine. Yeah. Perfect. Thank you guys. Appreciate it. Well, you got time to make your decision. And for those of you that are coming into the AMA, you've got till tonight to buy, to come till tomorrow. And then for those of you that are interested, you've got till the 1st. I truly believe if you're coming in, you should get in today. You're going to need to get in today because the AMA is really where it happens, guys. We need to be able to handhold you through the templates and everything. It's really important. Yeah. And as always, my team and I salute you. Kudos for everyone for being here. Thank you for supporting us as we bring great products to market and helping you guys along your trading journey. Take care, traders. My team and I are always here to help you. Jeff and Jim will be in the AMA tomorrow to take care of everything. Thanks, guys. Appreciate it. Have a great night.